How's it going? Good evening. So I wanted to go through a few things kind of that we covered earlier today during Alex's live stream, as far as the market conditions and things that are kind of happening that I'm seeing within the market. Um, I mean, I would definitely consider upside after the downside, but first we're going to talk about the downside, and then we can move into the upside. If we look at overall, pretty much, so this is the market from 17 till now, right? June 21st of 2021. Or yeah. So June 2021, about to be July soon. Basically I've taken my RSI and I've taken my MFI, money flow index, and relative strength index. I've extended them to about 60 days, I believe, on this. Let me check real quick. Yeah, 60 on both. And if you look at the pattern here, um, both of them are very much identical as far as overall movement, right? So, and we're looking at this more on a daily scenario, and we can kind of visualize the money flow follows the relative strength index, right? They're very close. It's just little dips here and there that are a little bit different as far as the movement, but when the money flows out, the strength of the market dips. That's kind of what we're evaluating here. We're kind of seeing, right, on everything playing out. Now, even though money hasn't really filled in here, you can see the strength kind of picked up pretty well right here, right? And then even though money flowed in really heavily here, you can see the strength kind of got held down. And this is probably more due to people selling at the same time while people were buying. So we push up to the top, just like an RSI, right? And when we reach this top on the RSI, well, people start to sell off, right? So we're getting a money flow right now that's kind of dying down, and then we're gonna also see people kind of, well, actually this one right here is going to be selling off because money flow is kind of dying down, right? So even though money flow is dying down right here, we're still seeing those spikes, right? So this is kind of a reactionary scenario where people are kind of still holding their bags, and the rest of this money is just hitting the market, right? So it hits the market, it peaks, but we can see right here that we're looking at this point at the money starting to slow down. So at this peak, we should already know that this thing probably isn't going to top again, right? Because you can see right here, right as soon as we peak, what happens right here? Are we as high as our previous money flow? No, our money flow is actually lower in this position. So we should probably be looking to exit at this position. So this is how we can use the money flow index kind of to our advantage, right? Same right here. We kind of peak up. We can see the money flow is starting to break out of its position of the 80, right? So anytime the money flow is starting to break out of the 80, we should go ahead and assume that we're getting ready to hit top. So this is a good ideal way to kind of find tops of markets and kind of figure out where you need to be looking to exit. And I'll show you that later on in the BLX. So basically we come along, we follow along, we go. Right here, the market's kind of getting smashed, but money flow is staying kind of steady right in here, even though we're getting pushed to the floor. And then right here, we get a nice peak of money flow. And even though we have a decent amount of money flow here, the sales pretty much do this, right? So this is just sellers outweighing the buyers, and basically the hodlers, right? Your floor. So your floor hodlers have started exiting the market here. What this means or what this is telling me basically is that we're probably in a scenario where long-term holders as well as short-term holders have began to exit due to panic, of course, during the pandemic and everything like that. I think this is kind of pandemic related. So if this is more pandemic related, even though we dipped down this hard, you can see money flow stayed steady. And ultimately, that's what pulled the market back up, right? So it pulled the market back up because the money flow stayed steady here, and it allowed the market time to recover. The money flow didn't dip with the market on the relative strength index here, which was a good thing. And then beyond that, they even pumped money back in to get it back up. Once it came back up, money flow kind of dialed down, and then sellers tried to step back in and push this down. And when sellers try to come back in and push it down, basically they dialed it up again, right? And then you can see right here where money flow just kept coming and coming and coming. And even though money flows kept coming, we ended up kind of getting our strength kind of weakened, right? So this is just sellers beating the buyers. Even though the buyers are stepping in pretty heavily, the sellers are really applying pressure in this position, and this is basically why we kind of held this line as far as our floor. From there, we can kind of see the market do what? Again, we can see the market start to push up, right? So the market starts to push up. What happens with money flow? Money flow peaks with the market, right? If we look here on our RSI, right here, we're way outside of our area right here. We're basically hitting 80, right? This is showing a major push through the ceiling. We should definitely at this point had looked to exit those positions right here. Well, that is what happened right here with money. And what happened with money? Money flow went with what? The strength, right? So they flowed together right here, and January flowed properly. After this happened, and this is kind of how you can tell your euphoric area, right? We like to call this euphoria. So euphoria, you see what? Well, we see the market start to trend up, but what happens to the money flow and the relative strength? They start to trend down, right? So now we can kind of tell, okay, both of these are starting to trend down. We're in euphoria. At this stage, it's probably a good time to exit, although you can ride to the top and play with it. The only difference between this market and any other market in these type of scenarios, and you can see right here, we peaked out too, right? And then after we peaked out, what happened? We stayed up right here. But ultimately, we ended up kind of coming down, right? And that's what's basically happened over here. But in these euphoric areas, a lot of people just feel the market is still going, and it's not. If you look at the market, right, the market is pushing up. What way is Bitcoin pushing? Well, if you look at this kind of in a trend, BTC is moving that way, right? So that's the direction that BTC is looking. It's not looking up or down or anything else. This is the way BTC is looking. How else can we see this? I mean, a couple of different ways, right? Look at the way our money flow is going. Look at the way our RSI is tilting. Are they not leaning the same way as BTC? Now, keep in mind, I'm talking about BTC because BTC runs the market. And I'll show you this later on, kind of how that works. But I mean, this to me is a very good indicator that, going south is what we're going to do until these right here find bottom, and the RSI is far from the bottom as far as on the daily. So we should definitely consider this fact when we're looking at it, right? A lot of people are reading this from like a day-to-day, like an hourly candle or a 4-hour candle or 8-hour candle. I think the daily and the weekly and the monthly, they speak volume as far as the overall movement of BTC. I can tell you on crashes, we're looking at a pretty far dip, right? Look at our dip here, all the way down to 33, right? Look at our pandemic dip right here, 36. Look at where we're at right now, 43. So it may be higher, but it should still be lower, right? So the likeliness of us seeing a lower low, I think is very likely just due to this, right? So if we just trend line this and kind of say this is the direction, right? So we'll follow these two positions. If the RSI is to respect the trend as far as the market movement, the RSI still needs to come down and touch this line. We've yet to do that here. BTC is still fighting and struggling to hold its position, right? And this is where we'll move into the impulse, and we'll talk about the impulse. So because BTC is struggling to hold its position, we can see right here, they're kind of holding it straight along. I mean, ultimately, if they just keep going, we'll hit the line eventually, right? Because the line is at an angle. But the thing that we have to keep in mind is that that's more than likely not going to keep going sideways. People will get stagnant. They will get tired of the market moving in this sideways direction, and then people will start dropping. They'll start trying to force people out so they can get a lower price, so that way the market can turn around and start moving in a new direction. As far as the bear market goes, I think right now we are in a bear market, right? there's a lot of things to consider, and there's different ideas and different percentages and stuff like that. And I watched a few other YouTubers and stuff like that, and I think this is a very solid um, analysis, right? Is that 50% marker. We come up here to this 50% marker, and 50% is roughly right about there, right? So if I were to put a line under that 50% mark, right where it sits, then we've already broken our 50%, right? So typically in these bearish movements, whenever we break the 50%, the market is done. As you can see here on our candle closes, we've already gotten 2 candle closes below this 50%. If we're to respect typical trend, this is a tell in itself, right? And again, this is where we'll move into the impulse scenario, and I'll kind of explain how that works. So with this, that's kind of where the market is moving. Right now, we are playing within this barrier from January. And this is something I've been talking about for a while. Obviously not on YouTube as much, but more in the FS group that I work with Alex Lorenzo and stuff like that. And this is something we've been discussing for a while as far as BTC matching its previous positions. It's matching its previous falls. It's matching its previous order blocks, right? So if you look at the order blocks here, we have a top and we have a bottom. BTC has 2 sides right now as far as its position. So one is above this line, right? And this is our play up here. And one is bearish and below this line. And we see we're kind of breaking through that right now. We've really been struggling to stay above that. We can even bring this down to just below that one, just to kind of make it look like this one's kind of hugging on top. And that's where we got this. But ultimately, we close back below this. We're going to see some serious bearish movement. And I think we catch an SMS off this line. If we go off the trend line of the market movement and we roll down, we maybe catch an SMS in here. But really, our order block, it comes all the way down to here. But, either way, whether we come to here or we come to this 30K, which I think is very likely, our close will probably end up pulling back, right? So, technically we could really dip really low as far as the wick goes. The wick can just kind of come way down here, like probably to this next order block of 26, the top of it right around 27. And then if it gets bad enough, we can even come down here to 20, 23, 24, with a potential side of coming down to all the way down to 21. That's pretty much a market crash at that point. But I think respectfully, we don't fall all the way to the floor yet. We kind of catch this first position, maybe 25, 26 on the dip, on the wick, right? Not the candle body close. The wick wicks into the zone, pulls candle body close, pulls back up to 30-ish. And then from there, we kind of finish our wave 5. But I'll explain that in just a moment. All right, again, so we're looking for BTC to land on this trend. If it's to respect typical trend as far as the movement of the market. If not, maybe even fall through it. We'll see. But I think it'll kind of follow this because we have the pandemic right here, and we can kind of pretend that this trend is the floor that we're seeing right here, right? That's what we're looking at currently. So with that, if I come over here to, I know it's a lot, sorry to give everybody threats. So we come here, this is kind of the market movement right now that I'm watching. We have SMS here, and then we just kind of keep SMSing out the same position over and over and over again as they're trying to climb higher with 0 volume. It's just like, if you look at the money flow index here, like we're running the floor of money. Like nobody's buying this. I don't know what's going on in this position, but like there's no spikes here. Nobody's interested. We got our Fu Manchu right here. It's kind of showing upside down volume. There should be no reason that we're getting these big pushes the way we are. Just the market's kind of dead in this center position. It's not something you want to trade in. You don't want to trade to the upside or downside of this position. It's a horrible position to try and decide whether the market wants to move one way or the other. Again, as I showed over here, we're kind of like right in the middle, right? You never want to trade in the middle because it could go up or it could go down. It's just not a good idea. I wouldn't be longing or shorting or any of it on this. I mean, you can catch these SMSs, the upsides of them, and try and play with them, but ultimately, I'm looking for this BMS. I'm looking for the break in market structure. I think we break down here, we come down, break down, break down, break down. If we continue to, or hopefully we end up breaking back up, hitting the 38 and getting a deflection there. I think that'll be a much healthier move. Ultimately, we can still break down and fall and have it happen that way, right? So again, all the threats, sorry about that. So basically we have the Elliott wave impulse right here. And it's basically an upside down impulse, but there's a lot going on here, as you can see right here. You're probably like, what is all this? So on and so forth. Well, if you look here, we got our 0, 1, 2, 3, 4, and we're looking for the 5. That's kind of what we're looking for. Really, I had the C up here at the 38. I was hoping for the deflection on 38. Again, we can always come right here because guess what? The C is still higher than the A. That's typically what we're looking for on these positions. We're looking for an A, B, and a higher on the C, and then a harder push down, right? So it looks like the C may have already be starting. Again, we can sit here and play the center position as long as they want, but ultimately it's got to go one way or the other. And either way, it's coming back down. As much as we don't want to hear that, that's really kind of what's going to happen here. I have it set here at 24,958. I've given it like a conservative top of like 26, 27. If you want to be extra conservative, and I can tell you this: never try to catch bottom. There's so many orders in bottom. 90% of the people are not going to get filled as far as their positions in bottom. And then also keep in mind too, a lot of these guys, they've had their positions open for a long time, so they're going to be like first come, first serve. But if we look at this from an impulse, right, we have our impulse down, impulse up, reactionary, impulse down, impulse up, reactionary, and then we should have another impulse down, and then we should start a new ABC, A, B, C, and then from the ABC, we should start a new impulse down, our 0, 1, 2, 3, 4, 5, and that 5 should land us on the floor. I know it's not something everybody wants to hear, but this is definitely a possibility. Again, this is something else I talked about in Alex's show today, and it's something that we should definitely consider. If you want to play the market safely. The deflection I have here is obviously at 47,144. Why do I have it at 47,144? Again, just like where we talked about that euphoric area, right? We're going to land just before the euphoric area, and then we're going to get knocked down because nobody's going to step in here again to press this back up. It would take a significant amount of news. It would take a significant amount of money. It would take a significant amount of a lot of things, and we don't have the money in the market, as we saw from the MFI. Does that mean that we can't get the money later? Sure, we could probably get the money later, but the thing is like, we had to look at realism, I guess, in a sense. And is the money? I mean, would you step back in? Would you step back in and buy a top on a market? I guess is what you should really ask yourself. And then if you think that you would say no, then what do you think a retail investor would think, right? They're not going to buy tops. It's just not going to happen. They're looking for a lower price. And that's basically what drives the 5, right? And that's what drives these movements is they push up to get money, and then they sell off to take profit. And then they push up, and then you buy on top of them, and it continues to push up. And then when they get to a certain percentage, they sell off again to take profit. And that's basically what happens here. And the same thing happens on the bull market. It's just higher ups. That's it. So you have your 1s, 2, 3, 4, 5, and like if we wanted to look at this whole market in a 1, 2, 3, 4, 5, really we could just come over in a daily, hit the daily, and we could go and that's the thing too, right? If we looked at it like this, 1, 2, 3, 4, 5. Market's done, right? If we think about it like that. And I mean, I know this is kind of far out as far as the position and stuff like that, but that would be the take on the overall market right there. And what happened after that 5? Well, after that 5, we have consolidation, right? What happens after consolidation? After consolidation, it goes one way or the other. And BTC obviously went the other, right? We also had to consider the death cross, right? Death crosses happen. It's a definite thing. The spike, again, this is a reactionary spike that's going to happen. It's going to be pretty big. It's a good time to take advantage of this to kind of you know, lick your wounds on your losses and maybe make some of that back up. That's what I would be looking for in this position. Again, this A is here. Really, this A can occur here even, right? It doesn't have to be at the top position of 48. I would think ideally it would be, because then it would be a triple top here, and that would give us enough momentum to push right down pretty hard. And then from that hard push down, we would end up in a scenario of getting a good push up to hit that, new high. And that's kind of what I would be looking for as far as this whole position. So from here, with this overall scenario, we come over here, right? A lot of stuff. I know. So we come over here. We're looking at the market. And again, we have our tops, and I've kind of blocked these out. So I just want people to get a perspective on how the market works. And, let's say you bought a top. How long would it take you to recover that money? To get back to normal money, if you were to run the floor and never go back up again. Okay, this is BTC never spiking again, never having a bull market again. It just runs the floor stagnant forever, which is highly unlikely. Highly unlikely. And I know people like, oh, well, it's Bitcoin, it's always volatile. It's like, yeah, it's always volatile, but look here. We always run the floor, right? I mean, to say any different, you would have to prove me different, right? There's no scenario that doesn't happen. So, I mean, you could say, yeah, Bitcoin can fall to zero or whatever, but like in all actuality, there's no proof of that. It's just going to continue up as far as data goes. So we look at data, $34 on the peak, $34 on the peak. It took from 2011, 12, 13, right here, 13, 3 years, and you were already back at what you bought the top at. Okay. So when people are looking at this and like, oh, it's a bear market. Oh, it shouldn't be in the market. Really, you want it. Okay. So in a bear market, you want to be a bull. You want to buy. You want to accumulate. In a bull market, you want to be a bear. You want to get your fiat for the other side of the mountain, right? So you should be DCAing out on the way up, and then you should be DCAing in on the way down. That's really kind of the process. That's how you make money. In a bull market, you make fiat. In a bear market, you make coins. That's the way you have to think about it, right? If I can make 5 BTC on one side, and I had 1 BTC on the first side, right? Let's say I had 1 BTC through the whole bull market, but on the bear market, when I hit the floor, I have 5 BTC. Guess what? Next bull market, I got 5 times more money. That's the way you have to look at it. And if BTC now is $62,000, and in the future, it has potential, maybe next bull market to be $250,000, $500,000. 5 of those versus 1. I mean, consider it, Again, going back to this, 34, 3 years. What happened at 3 years? We spiked right here, right? So we end up actually taking your $34 and making it $1,174. Quite a big push. But if we would have stayed on the floor, we'd be here, over here, right? So we fell down to the bottom. We lost money from here, yada, yada, yada. And guess what? Right here in, let's see. This is 13, the end of 13. Technically, I don't want to count it as 13 because it's not really a year. It's basically a month from being the year. So we'll go with 14, 15, 16, and 17. So this one took 4 years for you to recover that money if you were on the floor, right? Obviously, the number's off a little bit because I adjusted, but, not that easy to put these on here. So, but we'll just say if you're on the floor, it took you 4 years to get here. But what happened in 4 years? Well, in 4 years, you would be at this peak right here, right? So you'd be at $4,700. So you'd be at 4 times your money. And really, if you hold a little bit longer, you'll be at almost, 18 times your money, 19 times your money at the peak, because it peaks up again right here. Right here, let's move over. So right here, we're looking at the top. So again, we got another bull run, 20K right here. If you would have bought the top right here, it would have took you 18, 19, 20, and 21, right? It would have took you 4 years to recover, which would have been this run. And it would have been 20K, but it would be 20K if we dropped to the floor right now, which we haven't done yet. With that considered, we would be well over our position here, and we would have recovered all of our money. This is why you don't sell, right? Like, well, you can sell to accumulate, like we were talking about in a bear market. You sell swing trades, not day trades. Day trades, you can day trade if you want. Swing trades make bigger portions, right? So if you're looking for a 25-50% drop, that's 25-50% more of your coin. That's called a swing trade. Day traders kind of moving in and moving out of the market on a daily, trying to scalp off pricing, maybe gather pricing, and so on and so forth. So different analogies, but ultimately, right here, we would be at 20K. But where are we at right now? Well, right now we're at $35,000. You're still 15K up, even though we fell from the top. So if you'd have bought over here, you'd be 15K up right now. These are the people that are selling. These people right here, sell here. And it's a rotation of money. But the longer you stay in, the more money you make. And the more skill you apply to it, and the more you try to read the market and understand the market and figure out things within the market, that's how you can really kind of get the grasp of the market. Okay, so we come over here and then we look here. Now we're at $64,000. I know it wasn't 64. We're just gonna go with 64. So $64,000. How long would it take me to get this money back? Well, from this peak, while people are like, oh no, it's going down, it would take us till next year, and BTC will have a floor of $64,000. People, you just got to think about the potential here, right? So if we hit the floor today and BTC goes to 20K, next year we should have a floor of $64,000. You'd be up 3x just from holding it, and it never goes back into a bull market. It just holds the floor. That's 64K. You have to look at everything, right? You have to look at all the aspects of the market. And I'm not telling you the market's not going to come back up or anything like that, or I'm not telling you that there can't be another bull push or a bull run. I'm just telling you, like, this is not a bad situation. This is a good time to accumulate. Honestly, I've been waiting for the bear market, right? Because I accumulated a lot on the bull side, and I really shouldn't have. I really should have been selling on the bull side. And I kind of regret that, but at the same time, I'm making up that difference over here on the bear side on these drops. And this is something we really had to consider when we're looking at the market. Again, you're looking to exit to get more coin, and then next bull run, your fiat to the top is worth a lot more, right? So, and then next bull runs where you take your fiat and then you wait for the floor again. People just had to be patient. The money's not burning a hole in your pocket. It's not in your pocket. Again, 3, 5, 9, that's on the floor. So these are things to consider. Another thing I wanted to point out, key point, is if you look at our RSI, again, I ran these on the, I believe, 50 and 50 on this one, right? And this kind of gave me that better balance. So our floor is here, right? You see our RSI hits what? It hits the 30, just like it should. Our money hits the floor right here on the 30, just as the RSI does. We come over here, we look at this position. RSI does what? It pretty much hits the 30, right? I think it's 31, 32, something like that. And then our money doesn't quite get as low, but that's okay. RSI is what's telling us these things. We come over here. This is the only time that it really kind of switches up. And you see our RSI doesn't quite hit the floor, but our money does hit the floor. So this is the only time that occurs. The only thing that I see with this one is we ended up with this little ramp up right here at the end. We fell over, and then we ended up with a double market, right? Not really a double top, but like, you get what I'm saying. Like, this is a good push. You can get a lot of money here, falls back, and then pushes up higher. And you can see these things really, really overstep their boundaries as far as height, right? Like, they were hitting in the 90s on these peaks. That's how come this one had to fall over. It was literally higher than the one that went higher than it as far as push, right? The money was just shoving it up, and when things come up too fast, they have to fall over. It's just how it happens. You can't push, and that's the problem we're having right now. Is like people try to push that up too fast, that little movement we have, and now it's kind of getting that repercussion. So right here, again, we come over here, and then so if we come back to where we are right now, right? Yes, money has hit the floor, but where's the RSI? RSI is very high, right? we're sitting at roughly about 41, right? We'll say 41. We still have a ways to go to hit this bottom. And that's kind of where I'm getting these guesstimates as far as, the floor and stuff like that. And again, guesstimates or analysis, whatever you want to call them. At the end of the day, we're all just trying to look at the market and read it, in a specific way. So if you look at the percentage here, and we won't even say it'll come all the way down. We'll say it even meets the pandemic here, right? So if I put a line here, just where the pandemic came, that went pretty deep. We still have quite a bit of ways to there. So to think that the market is done at its current position and it's looking to turn around, I think is not a wise thing to do in the midterm. See, now I will say in the midterm, can we have a push and stay off the floor on our run up? Yeah, of course we can. We're not necessarily going to run the floor. BTC could very easily just kind of run across and then just kind of pick up and never touch the floor. And has done that in the past, right? Like right here, it kind of holds out the floor right here before the whole pandemic thing. All through here, look at this. It just stays out the floor, right? There's always that possibility, but I think we still have more to go. I think we're gonna break into this like purple zone right here, and I think that's a safe position to where BTC will feel comfortable. This will be a good buy-in spot right here between the blue and the purple. You basically got pricing around like 29 all the way down to like 24. I think anywhere in there is a solid buy if you want to just hold. I think we get a really good bounce out this bottom though. I think we hit that bounce, we come back up, and we get a really nice sharp push. Definitely a deflection, and then we just kind of have to take our profits and exit. This is what it is at the end of the day. Exit, come back down, get more, because our downside to get more coin is a lot, right? We come with the 40K. Let's see, 47. And we come back down and hit the floor, it's 50% gains. We'll say worst case scenario, 35, 40. It's really good gains on your BTC. At one BTC, that 35 to 40 is 0.35, 0.4 more BTC. These are things you have to consider. Again, money's kind of rock bottoming. I think we spike up a little bit. That's where I think we hit that 38. And then that'll push the RSI up a little bit just for us to come back down. Outside of that, I think I covered most of it. We covered our 1, 2, 3 ABCs. We covered the overall market structure. We found the dips. We figured out where the dips were kind of coming down and reaching. And now we kind of have an ideal position to look for BTC to kind of find a bottom. We come over here, we can see the market's kind of, following its SMS and kind of just riding up slowly. It has no real volume again. It's just like, look at this volume on top. It's like nothing. There's no money. So it's like, it shouldn't even be doing this. But I'm thinking our holders are probably a little bit higher than normal. And our holders will probably start dropping relatively soon after they see that the market's just not moving. And if they're in profit, obviously, right? They got to be in profit. We talked about our movement as far as overall, right? So our overall movement here. And the way BTC is facing right now, as far as channel wise, like it's just looking to take the channel and just kind of pick up and go. But the last thing I wanted to kind of go over is more of a speculative outlook of long term. So long term, if we continue to ramp like we did, right? So I'm going to take this in ramps, and I'm going to come down like this. I'm going to go up, and then I'm going to come down, and I'm going to go up, and then I'm going to come down, and then long term, I think we definitely got another big bull run. So we should definitely keep that in mind. Where that occurs, I don't want to be speculative like to 2022, 2024. I don't want to be speculative on that. I just think that all this is leading up to a really big run up. Where that timeline is, not completely sure at the current time being, until it starts to reveal itself. When it starts to reveal itself, you guys will definitely know too, and I'll definitely inform everybody. I hope this video is, educational, I guess, in some ways, and kind of informative in others, and allows you to kind of grasp the current market, what's been going on with the market, the past market, what the market can look like in the future, and hopefully it allows you guys to make real good gains as far as fiat, and coin, because definitely, fiat on the ups, coins on the down. That's the way we should look at it. All right, well, it's nice talking to everybody. I appreciate your time, and hopefully you guys stop by again. All right, see you.